Hello everybody, welcome to the live stream. I'm just making sure that everything's working because there's always a slight delay with me starting it and it actually appearing. So I just want to make sure that you can see and hear what's going on. I messed up this week. I didn't set it up until 5 minutes ago, so I think our normal attendees might miss out on it. But you can always watch the recording if you can't attend live. You can always watch the recording. A lot has gone on this week. We'll get into the nuts and bolts in a minute. Really big moves in the dollar index over the last few weeks. We'll talk a bit about this when we start looking at things. But yesterday, the dollar index traded to its best levels since March 2020. I often say this is one of my favourite markets, the dollar index. So we'll take a look at this in a bit more detail. Let's get into the housekeeping. So if you've never attended one of these before, we do them normally every Friday. It's a quick catch up with what's been going on in markets over the week so far, and it's a look ahead to what's going on next week. And then we spend most of the time on the trading platform, go through the major markets, stock market indices, gold, oil, silver, a few currencies, what else? Bitcoin and Ethereum. And then if you have any questions, any markets you want to look at, we'll take a look at those. So if you have any markets you'd like to look at, put that in the question, in the comment section, whatever it's called, the chat. And once we've been through the major stuff, we'll take a look at those. Don't spam the chat, just put it in once, and I'll usually get around to it. Let's get the risk warning done. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay. Big week next week. There's a lot of stuff out next week in many parts of the world. Is it mainly Europe? I don't know. But bank holiday on Monday, bank holiday in the UK on Monday, and I think in many European countries. But it's a really busy week. So Monday, we've got US PMI, which is so-called factory gate inflation numbers. So that will be interesting. Clearly inflation, massive topic at the moment. So even though our markets are closed on Monday, could see some volatility. Then on Tuesday, Australian interest rates. Interest rates, of course, central banks, I think, well behind the curve on this inflation story over the last 6 to 12 months. They're playing catch up now. So lots of focus on interest rates. You've got the Australian interest rate on Tuesday. Wednesday, first of all, European retail sales. We had those UK retail sales figures. I think it was a week before last, or was it last week, whenever it was. But they fell, which was a surprise. So again, it'd be interesting to see what the EU figures look like. Are consumers rolling back on spending because of inflation? Then, of course, Wednesday night, the big one, US interest rate decision on Wednesday. I haven't looked at what the expectation is. I read something a couple of weeks ago was it Goldman Sachs? I can't remember. Someone was forecasting that the US, the next 3 rate rises would have to be 0.5%. Again, I think because central banks have been caught napping a bit by this inflation story, we are potentially going to have to see them raise more aggressively, I think. So let's see. But anyway, that's Wednesday night, US interest rates. Thursday, UK interest rates. Let's see what they do, Thursday lunchtime. And then Friday, as if that wasn't enough excitement for the week already, next Friday we've got the S Non-Farm Payrolls. so the US unemployment numbers. So that is one of the busiest weeks for major news announcements that I can remember for some time. So yeah, the potential for a lot of volatility next week. Let's see what happens. Let's just do the contact stuff, then we'll get into the markets. So of course, do this with Capital.com. So the platform's Capital, so to trade with us, open a demo account, all that sort of stuff. To find out more, go to Capital.com. We also launched this week our Market Pulse report. And what that is, it's a summary of what investors did, and if I drag this across, what our clients did in the first quarter of the year. So if you go to our website, you can have a look at that, see how people traded. Clearly a big switch to oil and gold in the first quarter. So there's lots of interesting stuff, I think, in that. And we did do a video earlier this week summing up some of the main points of that. But to open an account and all that sort of stuff, go to Capital.com. If you have any questions about trading, drop me an email, david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets. I did a 30-minute interview with Reuters the week before last, and I think it's actually quite interesting. I mean, I'd say that because I was in the interview, but just looking ahead for lots of different markets, and I think this is a confusing time, I think, for many of us, or for me anyway, from an investment point of view, because it's been so long since we've had high inflation. And you can see with what's going on in stock markets that I think the jury is still out on what the rest of this year looks like from an investment point of view. But anyway, if you go to my Twitter account, Jones the Markets, I retweeted it, I think it was this morning, this interview with Reuters about expectations for the year. And to find out more about my trading approach and the training course I run, go to jonesthemarkets.com. And of course, don't forget to follow us on YouTube, Twitter, and Facebook. Okay. That's it. Let's get into it. Let's get into the markets. So I know I say this every time. I absolutely love the dollar index as a market to trade, and I thought we'd start off with this. It's been, for me, it's been a great market over the last 2 or 3 years. Great trends. If you've never traded or looked at the dollar index before, it's the dollar against a basket of currencies. So the pound, the euro, the yen, the Canadian dollar, the Swiss franc, the Norwegian, the Swedish, probably a few others that I've forgotten. But I think it's a real interesting way of looking at the dollar and a top-down view of foreign exchange markets. We've got the euro at a 5-year low, we've got the pound at a 2-year low. I think dollar yen, is it at 20-year highs? I don't know, let's have a look in a minute. But the dollar index, you can see, we've seen this great run in the US dollar. And I've got, a couple of I always have usually at least 1 or 2 trades running on the US dollar. I've got a couple of trades running at the moment. I think it's interesting. I do wonder though if the dollar has got a bit overextended in the short term. We've seen this run, this absolutely brilliant trend since May of last year. Almost a textbook trend line, great buying opportunity in Feb. The market's really moved higher since then, and I wonder if perhaps we'll see a bit of cooling off for the US dollar and a bit of strength in the pound and the euro in the weeks ahead, given how extreme we are. But I'd still be a buyer on dips. So I thought we'd start with the US dollar, as it has been an interesting market, but we're nudging back up to these corona highs for the US dollar, and clearly with the US interest rate decision next week, a really interesting market to watch. I think, even though I'm long at the moment, I've got a stop, I've trailed up. I think it's a bit overheated. So if we did see it come off, it'd also lift the likes of gold. We'll see. But if it's a market you don't watch already, I would definitely recommend keeping an eye on the dollar index. So while we're on the subject of currencies, let's take a look. Let's take a look at some of these, and then so we'll start off with currencies this week. Then we'll flip through our usual markets. So euro US dollar. So just yesterday, the euro traded down to 104.70. If we scroll right back, this is the lowest for euro US dollar since, we go back here, early 2017. So it's a 5-year low for the euro. So incredibly weak, and it's dropped. If we pick up, when were those highs? Those highs were only last summer. So it's gone from 122 to 105. So it's dropped, what's that, 1,700 points. That is a big old drop. It's dropped 13, 14%, something like that. So major drop in euro US dollar. Still weak. We did a video yesterday on the pound against the dollar. We'll take a look at that in a second. So for me, even if we got a rally in the euro, I would still be looking to sell. Okay, so I think short term, any rallies in the euro, the same way any weakness in the dollar buying opportunity, rally in the euro selling opportunity. But I do wonder, if we go back from a longer term point of view, clearly down at these levels, sort of 103 to 106, historically over the last 5 and a bit years, it's been a major floor for the euro. So it's still weak, but I wonder if perhaps in the second half of the year we see something of a euro recovery. Let's see. There's so much unknown at the moment with inflation clearly and everything else, and the balancing act the central banks have to do is raise rates to control the inflation, but don't raise them so much that it tips everything into recession. We had those US GDP figures yesterday. In the first quarter of the year, the US economy was negative. If we get another negative quarter, that's it. That's the recession. So that was a surprise. I think there was slight growth expected, but it was negative in the end. So it's a real tricky time for central banks. So a bit of a bounce back today in the euro, but for me, I would absolutely be selling a rally in the euro. Great downtrend here. Even if it rallies 700 points from here, it's still in a downtrend, the euro. So still weak overall. Same for the pound. We did that video on the pound yesterday. I did put an order in to sell at 126, and the pound today is traded up to 125.85. So that order hasn't been hit. But there's the pound. So that's the story of the pound. Again, since last year, a pound would buy you $1.42. Today it buys you $1.25. So again, what's that? A 12% slide in the pound against the dollar since last summer. And this is all tied up, of course, with dollar strength. But again, if we look at the pound, we go back to July 2020, June 2020, 122.50 was an important floor for the pound. A couple of 100 points, 300 points below where we are now. So again, I think these markets will still weaken from here, but I do wonder, do we start to get towards something of a major floor for these currencies? Let's see what happens. Let's take a look at dollar yen, then we'll have a look at some other markets. So dollar yen, that has been, it was parabolic. It's like a cryptocurrency, isn't it? So it's gone March lows at 115, currently at 130. So it's more than a 10% move. That is pretty phenomenal. In 2 months, less than 2 months, a 10% move in dollar yen. I don't know how much data we have on dollar yen. Not enough. We only go back to 2016. But clearly that really does demonstrate the strength of the US dollar and a very weak Japanese yen. So again, for me, it's had a bit of a pause today, but in a trend like this, I'd absolutely still be a buyer of dips in something like dollar yen. So really interesting markets to watch. We are going to do an FX video on the channel next week. We did pound against the dollar this week. There's never that much interest in when we do a currency video, but I do think at the moment, with everything that's going on with inflation and interest rates, we should be keeping an eye on currencies for trading opportunities. So there we go, lots going on. Let's take a look at stocks now. Let's start off with the S&P, the S&P 500. I do wonder, I don't know, but I wonder, it's really interesting where these markets have come down to over the last couple of weeks. And I think if ever there was a buying opportunity in the S&P or the NASDAQ, we'll look at it in a minute, we're here. So let's just construct what we've been through this year. So we came into this year, 4th of January, the S&P very briefly hit a fresh all-time high. Then inflation concerns, is everything overvalued, all the usual stuff. Market sells off. So we hit lows in January. Bounces, then of course we have the Russian invasion of Ukraine. And what's interesting, I think from a price action point of view, this is the day of the Russian invasion, the 24th of February. The S&P traded down to 41.05. And we have not taken out that low yet. Market rallied into late March, 46.50 or thereabouts, sells off again, and we're holding above that low. So for me, let's call it 4100, is a really important level. So in terms of risk versus reward, I think it's an interesting trade down here. So for me, if I was a buyer now at 42.40, I'd put my stop loss, the low is 4100, let's say 40.75. So I've got 165 point stop loss. But if the market, crawls back up to those March highs, there's 400 points upside. So I think it's a really interesting trade on the indices down here. It really is, I think, bounce or bust territory for me. And I think if we see the S&P start trading through 4100, I think the risk is we go into a much more protracted sell-off. So again, stock markets with everything that's going on next week with interest rates, I think it's really interesting to watch how markets like the S&P react from here. But for me, 4100, absolutely the big level to watch. And for me, I'd be a buyer. But let's see what happens. If we look at the NASDAQ, similar sort of stuff with the NASDAQ 100. I mean, the NASDAQ, because it's a bit more volatile, did have, just a couple of days ago, just the briefest trip below the lows, which it also did back here. So that way, again, this is the invasion low, 13,030. 15th of March, it pushed about 70 points below that low before rallying 2,000 points higher. And then we've seen it push slightly below that low again. So it traded to 12.8 this week. So it pushed 150 points below that low. And we've something of a bounce back. So again, for me, NASDAQ, 12.8, let's call it 12.8 is the level. So I would expect stock markets to try a bit of a recovery from here, but really interesting to watch. But I think if we see, if next week we see new lows for the year for stock markets, I think we could see, a bear market perhaps for the rest of this year. Let's see what happens. FTSE 100, so the UK market. So again, the FTSE, I've said this before when looking at the FTSE lagged on the way back up from the 2020 lows and has not been hit anywhere near as hard this year. And actually, the FTSE is slightly positive for the year because the FTSE is a very different mix of stocks definitely compared to the NASDAQ and compared to even a broader index like the S&P. So the FTSE has more defensive stocks, dividend yielders, more traditional, boring, some would say, stocks, but the FTSE is holding up better. But the FTSE cannot, for now at least, crack 7,700. So for me, I always watch the S&P, but I think it's quite interesting how well the FTSE has held up this year. If we take a look at the Nikkei, the Japanese market, we did make some money on that Nikkei short we did in a live stream a while ago. And for me, that trend is still down on the Nikkei. So for me, absolutely, maybe that's the trade we'll do. That's the trade we'll do to try and calm down some of my bullishness about US stock markets. We'll go short the Nikkei. So the Nikkei has been trending lower since September last year. And this downtrend has done a pretty good job. The market's trading at 27,300. For me, I'm going to go short and I'm going to put my stop above this high. 28,640 was the high. Let's say 29,000. Keep the maths easy enough for me. Let's do it at 29,000. So we'll put a stop loss in and we'll just try and run it just in case markets do collapse. At least I'll be short one stock market. So as usual, we'll risk 100 quid on the trade. So I'm going to sell it now. I'm going to take the view, even if it pushes higher, it's only if it takes out this old high, this late March high. Am I going to get think that perhaps the trend is reversing? But for now, I'm quite happy to be short, so we'll sell the Nikkei. So for me, that downtrend in the Nikkei still intact. My target, if this downtrend is going to continue, is for a trip back to those March lows at 24,500. Let's see what happens with that trade. So stock markets, for for me, it's all about these US markets. Do they hold above the lows for the year so far? And that is the really big level to watch. Let's take a look at oil. I think oil now is a boring market. And I think I probably said this in recent weeks. Again, let's take a step back and look at where we were in March for oil. So when oil, this is West Texas crude that traded as high as 126 in March. At that point, oil was up 70%, 70% for the year. And we weren't even 3 months into the year. Clearly the market's come off since then. I think unless we have a massive change to the situation in Ukraine following Russia's invasion, so either it gets escalated even further, which none of us want to see, or we have some surprise peace deal, I think we'll just see oil flip-flop around like it has done for the last 4 or 5 weeks or so, flip-flopping around the $100 level. You can see, can't you? You can see exactly what the price of oil's done. When it trades down to like 95, it's too cheap. When it trades up to sort of 105, 115, it's too expensive. So for me, I think we may have to wait to see a real trend for oil again. If we went back to those lows in April of 2020, that trend is still up. So I would absolutely buy let's say, we saw a sharp sell-off to 90 or 85. That looks like a buying opportunity. But for me, with it flip-flopping around, I don't think there's an opportunity there. I think it's just a very sidewaysy market. If we flip this over to an hourly chart, you can see. There you go. That's the last, what's that? The last 6 weeks or so. So again, this has been really good support. This was a great trade, hindsight trade, middle of April, when the market came back to 92.50, the old lows from March, came back to 95 later in April. If we saw it drop $10, $12 over the next couple of weeks, it looks like a good buy. It's struggled up near here, but pretty directionless, I would say, on oil. So that's that. Natural gas. I do have a trade on natural gas. Natural gas, I closed out trades. When was it? Hang on a second. I think it was the biggest winning trade so far this year in this account was the natural gas trade. So I closed it out and I put a new trade on. So here we go. It was here. So £1,000 and £889. So what's that? Nearly £1,900 on natural gas. And I did a new trade in the video we did the other week, which is currently losing about 50 quid. And I wonder, has the momentum gone from that market now, from natural gas? Absolutely crazy run up from the Feb lows around about 4, traded up to more than 8, which was a 14-year high for natural gas. If we scroll this out, I've got to go even further than that. Hold on a sec. There we go. So natural gas hit its best levels since 2008. The trend is still up. Personally, I'd much rather it had a bit more of a sharper correction from where it is now. If I was going to do a new trade, perhaps down to 6. Arguably, that trend is still up, but given the size of the move, I wonder if with natural gas we'll see similar moves to what we're seeing in oil over the last 6 weeks or so. Has a lot of the momentum now left this market. The price of the thing doubled, don't forget, in just over a month. We're not gonna. It'd be highly unlikely to see it double again from here. So let's see what happens. So I wonder if some of the excitement and momentum has gone out of that market. So I think oil and natural gas perhaps a bit boring. Let's take a look at gold and silver. Hang on. I know I've got an order somewhere. I got filled. The last gold video we did on the channel was a few weeks ago, and I put an order in to buy at 18.90. That got filled 2 days ago. So it got filled at 18.89 and a bit, with a stop at 18.30. The market's 19.10, so I'm up about, you can see it, £88 on that. I think that, again, a bit like oil. I wonder if we have seen the best moves in gold for a few months at least. We saw the market clearly run away on the Russian invasion, could not take out the August 2020 highs, fell back, and this is where we are. So I put the order in to buy at 1890 because it was, short-term support. So again, perhaps next week, particularly if we see some US dollar weakness, we might see gold have a little look at 2000. But personally, I don't think it's going to be troubling 2075 anytime soon. So short term, I think we could see gold crawl perhaps a little bit higher from here. It's been under pressure over the last 10 days or so. We've seen it lose, what's that, 100 and a bit dollars. So about 5% drop in gold. I wonder, will we see it perhaps into this interest rate announcement next week? Will we see it perhaps a little bit of a recovery from here? So I'm short-term bullish on gold, but I don't think that medium-term there'll be anything too exciting. Let's see. Let's see what happens. And silver, I hate silver as a market to trade because it just seems like it's going to have a trend and then it stops. Arguably, it is a buy down here, though. Arguably. I think if we were gonna maybe we'll do this trade. It will lose money because I always lose money on silver. But it's interesting down here that it's traded back from 27 in March down to 23. 21.50 or thereabouts has been a real floor for the price of silver. So I think it's interesting down here. We've always seen it manage to stage some sort of recovery from these levels. Now I won't do a trade on silver. I think I need to be a bit more patient and see if it slips a bit lower next week. But I think it is an absolutely boring market, silver. If you go back to August of 2020, this market now is just in a sideways range. There's a large portion of our YouTube subscribers who love silver, so we always do a video on silver. But for me, from a trading point of view, there are far more interesting markets than silver. And nothing has happened in the last week to change our mind on that. But I think it's an interesting one to watch. If it drifts next week, do we yet again see this $21.50, $22 floor hold up the price again and be a buying opportunity? Let's see. Let's see what happens. Right, so we've done indices, oil, gold, silver, FX. What are we going to do next? Bitcoin. We'll do Bitcoin. I think I've still got my long on Bitcoin from 39,000. I think I bought in here somewhere, or maybe it was in March, whenever it was. It's really interesting. I think I've said it before. I think cryptocurrencies are markets that suck in so many people into trading, and then most people lose money. So I think they're horrible markets from that point of view. And I don't think that Bitcoin is going to $500,000 or any of that nonsense. Maybe it will, but I don't think it is. And whenever these markets go through periods like Bitcoin has been through since November of last year, there's a massive, massive drop-off of interest. So cryptocurrency markets only seem to have a lot of noise around them and people trading them when the markets are running away, running up higher, because people see it as easy money until these markets dump and they give all their money back and more. But I think it is interesting what has gone on with Bitcoin this year, and we are, for me at least, still in the recovery mode. This little recovery is still just about chugging along. So for me, I've given back profit on the trade. I'm sort of happy to sit with it as long as this trend continues. But it's pretty boring. Yeah. But for me, the recovery off the Jan lows in Bitcoin is still going. So perhaps we'll have a little run back up to 48,000. Let's see what happens. But for me, again, if it starts slipping below 32, I think the risk is we could see even more selling in Bitcoin. Let's see what happens. But again, not the most exciting market in the world at the moment. And the same for Ethereum. We had the downtrend, bang, 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 bang. We've broken out the downtrend. Again, for me, I'd still be a buyer of a dip. We have higher highs, higher lows, just about. So it's not, running away a gazillion % a day. But for me, that is the current trend in Ethereum. So I'd still be a buyer of dips in that one. But not very exciting. So next week, markets to watch. For me, there are only 2 markets to watch, given that it's such a big week for interest rates and inflation. The dollar index. So the dollar index has been in a trend for a year now, is perhaps overextended in the short term. Expect some volatility there. And the S&P 500, so the broader US stock market. I think it is interesting where these markets are now, because they've come back to these old lows from Feb and March. And for me, if they're going to bounce from anywhere, then they're here. So let's see what happens. So for me, those are the markets to watch. So what I'm going to do now is jump into the questions. Before I do that, let's just go through a reminder of where to go for details. Capital.com, the website, open an account, download the app, have a look at this trading report we did for the first quarter. David.jones@capital.com if you have any questions about anything. Don't email me asking me my opinion on the market. I'm happy to do it in this, but so I can't do it via email. But if you have any general trading questions, send me an email at Jones the Markets on Twitter and jonesthemarkets.com to find out more about me and my trading approach and the training course I run. Right, let's get into the questions. Why are US markets down today? Well, I don't think they are down, actually, if you're looking at stock markets. If you look at yesterday's official close, it's slightly down. What was the official close yesterday for the S&P? It was here. So at the moment, we're trading pretty much bang on yesterday's official close for the S&P. And for me, it's interesting because is this the start of a recovery? So this is going back to the 26th of April, which was Tuesday. So for me, are we going to see these markets get a bit of recovery on? So at the moment, from a short-term point of view, I'd be a buyer of dips. Let's see what happens. Have you seen the drop in copper? No, I have not seen the drop in copper. But let's take a look. Oh, I see what you mean. That's my oldest long position is copper at the moment. And I've clearly given back profit on that. That's interesting. That's to me, for me, you can see that we look at copper fairly regularly on these sessions. And for me, it's fallen out of the uptrend. That uptrend's been in place for more than 2 years now. But for me, when a market falls out of a trend, I will give it one more chance. So for me, I'd be a buyer. Let me see, have we got any trades on copper? We haven't got a trade. Let's do a trade on copper. So what I would do, just because the market's fallen out of an uptrend, that's not a good thing. But it doesn't necessarily mean the market is going to fall off a cliff. So I think that's an interesting market to watch. So what I'm going to do, I'm going to be a buyer of copper, take the view that this weakness has been overdone, and I'm going to put my stop underneath. It's the lows for the year, which I think is quite a good place to have a stop. So the low for the year was 428. The market's 442. So I'm going to go, what should I do for a stop? 415. So we'll buy copper. Put a stop at 415, 4.15, and we risk £100 as usual. There we go, that'll do. So I'm going to buy copper now, where it's trading out, 443. That's the low for the year. There's my stop. And just to see if it can push its way back into this trend and have a little run higher. And I think if copper starts making new lows for the year, that trend does start to look well and truly over. But I think it's interesting that it has fallen out of the uptrend. Let's see what happens. We'll come back to it next week. Is Singapore dollar becoming a safe haven? I don't know. What about Singapore dollar, Japanese yen? Let's have a look. Japanese yen. Singapore dollar, Japanese yen. I would say we are seeing... clearly the yen is getting absolutely clobbered against most things, isn't it, at the moment? And I remember we've clearly looked at this before because I've got that trend line in place from March of last year. Like other markets against the yen, it has absolutely soared higher. And again, this is a 10% plus move since the March lows. And again, like dollar yen, it's what's going to happen up here? It's had a bit of a pause. What's going to happen? You know. So again, I think if we saw the dollar weaken, then perhaps we're going to see the Singapore dollar weaken. So I'd like to be a buyer. I'd just rather buy a dip. So, but it's pretty similar in lots of ways to that dollar yen chart. If I was long at the moment, I definitely have a stop in for taking some profits. Because after a rise like that, it's going to be vulnerable, isn't it? But I'd still be a buyer, but I'd rather have a deeper sell-off. So it's always tricky for me when a market has run away like this, you know, where'd you get in? What I would do, if it broke out through those highs, 94, 60 highs, be a buyer again with a stop the other side of 92. But another interesting one to watch next week. But, you know, we need to bear in mind as to how far it's come. Cotton. I did a trade on cotton last week, actually. I bought the breakout or the other week on cotton. And I was underwater, but I did notice today it had flipped back into profit. This has been one of these markets where I've traded it in the past, but I don't think I've done a trade on cotton since November. And I've sat here on these live streams, and when I look at markets throughout the week, watching this market just move higher, and I just without actually doing a trade on. And the trend in cotton going back to 2020 lows is clearly up. So I did put an order in. I think it was in the middle of April. It would have been here. So I got filled here at a buy in cotton, went up for one day, and then completely went against me. But here we are again, trying to break out again today. So I'm in the trade already. I'd much rather buy a dip back down to where it was in March. Of course, the risk is you wait for a dip and the dip never happens. So I think it is hard to trade breakouts. For me, I don't know where my stop is on it. If I was a buyer now, maybe we'll do this trade as well. So if I was a buyer now, where would you put your stop? Well, where I would put my stop, I would not want it any closer than the other side of these lows. So the trend is up. Maybe 120 for a stop. I think it's always tricky because we're seeing almost failed breakouts in the short term in cotton. There's this breakout here that I bought and the market sells off. There's this breakout now, and again it seems not quite sure as to whether it's going to go. Perhaps the better trade is to be patient and see what happens. But for me, if I was a buyer now, I'd probably put a stop at 120 on cotton and see, is it going to start a major swing higher? I'd much rather buy a big sell-off, but the risk is you don't get the big sell-offs. Let's see. But undeniably bullish. And this goes back, I've mentioned this a few times, this is why inflation is where it is, and why also I don't think inflation is going away anytime soon. You know, as we're watching this, cotton is at its highest levels since June 2011. So we're at nearly an 11-year high for cotton. The price of stuff is so expensive. Think how much stuff, everyday stuff, needs cotton. You know, and the price of cotton is at 11-year high. It's pretty much triple what it was 3 years ago. You know, so this is why I think inflation is going to be a problem for much longer than any of the central banks, even now, still think, because stuff just keeps going up in price. So there's cotton. Apple and Netflix. Let's have a look, because Netflix has been an absolute, incredible slide in Netflix. Apple, was there results last night? Were they a little bit cautious, Apple? I can't remember. But I'd be a buyer on Apple. They've fallen out of the uptrend a little bit, but if I was a buyer, do we have a trade on Apple? Hang on a second. Yeah, we do have a trade in Apple from February, which is slightly in profit. I'd be a buyer of Apple, and I would put my stop. I think it's actually quite an interesting trade, Apple. I would put my stop the other side of the March low, 148.90. So maybe, I don't know, 145. So it's been a bit sideways since December, but we've still got, just about higher highs and higher lows in Apple. So for me, it's interesting, and it's bounced back quite strongly over the last couple of days. Netflix is a different story. I think we're going to do a longer video on Netflix this week. I mean, I've been quite astounded at that slide in Netflix. I mean, they came out with their earnings, which I'm guessing was here, wasn't it? April the 19th. And they said they'd seen their first decline in subscribers since whenever it was. And the stock absolutely clobbered, traded down to 258. But it slid another 20% lower since then. So at the time of doing this, Netflix is at its lowest level since 2017. So it's a 4-year plus low for Netflix. And it's always tempting, isn't it, to buy something because it's fallen a lot. But of course, we could have said that when Netflix was at 380 in January. And it's gone from 380 to 200. It's nearly halved since January, Netflix. So it's always tempting to think, well, how much lower can it go? But with Netflix, it clearly can. It was at $700 in November. So in 6 months, Netflix has dropped 70%, roughly, something like that. So for me, interesting to watch. If I was a buyer, if I absolutely had to buy them today, and I think it's a massive gamble because we're buying a falling knife. Where would you put your stop? I would have it. What's the lowest it's been so far? It's been 185 so far, so maybe 180. So 10% below where we are now would be an interesting one. But bear in mind, it was only yesterday it was at 185. So I think I'm not saying if you bought it now you wouldn't see great returns. But I think everybody has thought that over the last few weeks for Netflix, and the thing just keeps going lower. Incredible. But I mean, really interesting. But we'll do a video on it next week. But for me, I'd rather wait for it to start turning around a bit from here. We looked at crude oil. Take a look at platinum. I've got a trade on platinum as well. I think what's it done? Platinum. I mean, is there a trade in this account on platinum? Hang on a second. No, okay. I think platinum is, for me, I mean, again, it's gone a little bit boring, platinum, but it looks a bit like the S&P actually at the moment, where we've got these major lows for platinum from September, down at 890, and it came back to it in December, 890, and it came back to it again over the last couple of days. So if platinum is going to rally from anywhere, I think we're here for platinum. I think if it starts trading below 890, I think the risk is we start to see again a bit more of a sell-off in platinum. So for me, I'd be a buyer of platinum now. And I think the risk reward is interesting, because if I'm a buyer at 940 with a stop at, let's say, 860, we've got $80 risk. If it has a look at the old March highs at 1160, there's $220 upside. So I think that's an interesting trade to do. There was a comment actually on the subject of trades. I try and do at least a couple of trades in these live streams because I think it makes it more interesting. But there was a comment on last week's live stream saying just placing these random trades. It was implying, I think, it was irresponsible. There is nothing irresponsible about the way I place trades on these live streams. I still try and have a sensible stop loss, and I don't, and I think there are logical reasons for placing the trades, and I still risk. I'm only risking £100 on these trades, and the account value is now 19,600. So I'm risking 0.5% of the account value on these trades. So I really did object to that comment last week that somebody made. Because I think really important to manage your risk properly, have stop losses, and not take silly levels of risk. So the trades I would do in these live streams, absolutely the same sort of trades I do for myself. And I think for here, we've got it's a really solid reason for placing the trade because this has been such a major floor bottom for platinum. So it's 890 needs to hold. Let's see what happens next week. We looked at platinum, aluminium. Let's have a look at aluminium. Let's have a look at this aluminium spot. I think that's a really interesting market now. I would not be a buyer today because it nudged a bit lower today, but we've got this trend in aluminium that's been up for more than a year now, and the price of aluminium has gone from 2,000 in February last year to 4,000 in March. Again, we should not be surprised why we've got inflation when raw material prices are so expensive. It's dropped a lot. It's dropped by a third since those March highs, but we're coming back to that longer term trend. So I think it's a really interesting market to watch next week. So for me, I would be watching for the bounce next week in aluminium. Let's see, for fans of the RSI, we're oversold on the RSI. Late April lows, here we are, below 30%. If we go back, the last time it was oversold was back here in November, which again was a major low for aluminium. So I think that's probably one of the most interesting charts that we've looked at today, is that aluminium chart. So for me, I'll be watching for a bit of strength to come in next week. Let's see what happens. What's your long-term thoughts on crypto? Do you know what? I just think they'll end up being boring markets now. I think that the trend is still up on crypto, but I don't think we're going to see 500,000 for Bitcoin personally in any time soon. I know the platform doesn't support them. The platform does support them, but if you're a UK registered trader, you are not allowed to trade crypto on leverage in the UK. So if you're a UK person, like me, in my normal trading account, I can't trade crypto because I'm in the UK trading with the UK regulated broker. If you're in continental Europe or other parts of the world, I think you can still trade crypto with us. If you have to take a position on the VIX today, how would you trade it? I never trade the VIX. I think it's an interesting market to watch because, of course, it's the volatility index, it's the so-called fear index. If I had to trade it today, I'd probably sell it personally, but I never trade it because you have these clearly coronavirus pandemic, March 2020, VIX goes nuts, then falls off, and then we have these surges along the way. I mean, we've seen the VIX stay persistently higher this year because of everything that's going on with inflation and the Ukraine invasion by Russia, but it's not a market I trade, but I'd be a seller if I had to be anything today. Tesla, so we look at Tesla. I think Tesla got absolutely clobbered the other day, didn't it? I would be a buyer of Tesla. So it was down 10% of the day. So for me, I mean, it's sort of, flip-flopping around this not longer term trend, this trend, it's the last couple of years trend for Tesla. I'd be a buyer. If I was a buyer today at 920, the absolute closest I'd have my stop would be at 800. I'd probably want it the other side of 700. I think perhaps we'll struggle to see fresh all-time highs anytime soon on Tesla, because again, end of last year for all of these high-tech growth stocks, there was concern that they'd got overvalued. So I think for some of these tech stocks, for a lot of these tech stocks, it could be a bit of a trickier year. But for me, I'd be a buyer now and see, can it run up to 1100 where it was at the beginning of April, and see what happens. Euro, but clearly affected by Mr. Musk's proposed acquisition of Twitter. Euro Canadian dollar, weak, and still weak today. This is the lowest. When was it this low? I don't think we've got, let me have a quick look, because I'm quite curious as to how low this is. I'm just going to have a look on something else. Just bear with me a second. Euro Canadian dollar. If I just drag my charting software across, hang on. Here we go. So this is the lowest it's been since 2015. So that's a 7-year low on Euro Canadian dollar. Where's my chart gone? Hang on a second. So the trend is clearly still down, isn't it? I'd like to have a rally to sell into, but that looks like a great trend for now on Euro Canadian dollar. So still weak, isn't it? And even if it was to rally, 1,000 points from here, the trend is still down. 144 is where that trend line's coming in. So for me, I'd still be a seller of strength in the euro against the Canadian dollar. Wheat and corn. I don't think we cover those markets, do we? No, we don't cover that. Corn. Oh, we don't have much data on corn. Hang on a second. No. Let me just drag this one across. Hang on a second. Wheat. Again, wheat. We did see wheat move a lot higher on the Russian invasion. So wheat went from 800 a bushel to 1300. So a 50% move in wheat. Clearly, it's cooled off since then. I do wonder, again, like oil, like natural gas, have we seen the best of the move for now? And we just see chop, chop, chop for these markets now. So for me, that's what I think. For a small account, do you still recommend 1 to 3% loss per trade? Absolutely. Whether your account is $300 or $300,000 or $3 million, for me, you know, the first thing you should do when you're doing a trade is you think about the risk on your per trade. And for me, I absolutely religiously, and this market's come off, do not risk more than 2% on any one trade. So if I've got a 10 grand account, it means that if any trade goes wrong, it doesn't lose me more than 200 quid. And people hate this idea, which has been around for decades, this sensible risk management, and they hate it because they want to believe that trading is a get rich quick scheme. And they're not going to get rich quick if they're only risking 2% of their account. Unfortunately, most people lose when it comes to trading. At least 70% of people lose when it comes to trading. And one of the reasons they lose is because they risk far too much. So for me, absolutely, whatever the size of my account, I never risk losing more than 2% on a trade. So in this account, at the moment, this account's at 19,600. You can see it here. We started this account about 2.5 years ago, slightly more than 2.5 years ago, with real money. Capital's money, not my money. And it was 10 grand. So this account has almost doubled. It's taken 2.5 years to do it. But if I could double my money every 2.5 years, I'd be more than happy with that. And the risk per trade at the moment is never more than £250. So that's not even 1.5% risk per trade on this account. It's probably time to bump it up a little bit. But again, you know, sensible risk management is the way to do it. And I can almost guarantee you, if you're risking more than that, you won't be profitable. If 10 people said they were going to risk losing 10% of their account on any one trading idea, I'd absolutely bet with all of them they won't be trading in a year's time. They'll have blown their account up. I'm that confident. So yeah, risk control, much more important than oscillators or moving averages or any of that nonsense. So there we go. Meta or Facebook, your opinion on results? I don't know, actually, to be honest. I know there's been a lot of results out this week. I haven't really followed it, I must admit. But if you have a look at Meta, I mean, again, I suppose if you wanted to be a buyer, be an aggressive buyer at 208 with a stop loss, I'd have my stop at 170 or even lower than 170. So wide, it's a 15% stop loss. I probably wouldn't do anything. I'd wait and see. You know, we're in a very different economic backdrop this year because of inflation. A lot of these tech growth companies have been absolutely clobbered over the last 6 months. I don't think we're going to be seeing Meta trouble $380 a stock anytime soon. I'd be quite happy to wait it out. Let's see what happens. Yeah, there's so much going on at the moment. I'll be in no hurry to go into some of these stocks that have been knocked really hard, like Meta and Netflix. So I would be quite happy to sit on my hands, to be honest. Oh, someone said something. What's the financial saying about going away in May and coming back in September? It's interesting you mention this. There's a famous saying that goes back a long time for the UK market. Sell in May and go away, come back on St Leger's Day. St Leger's Day is a horse race. St Leger's in September, I think. So it basically says sell in May, come back into the market in September. We are doing a really interesting video at the moment. And one of the things we're looking at is this sell in May thing. So if you sell out in May and come back in September, historically, how does that perform? We've done it on the S&P, and the research I've seen so far, I think over nearly 100 years, it doesn't work. Or you're much better off staying in the market from May through to September. And interestingly, September, over the last nearly 100 years on the S&P, is the worst month for the market. So it should be on the channel in about 3 or 4 weeks. And we also look at times of the day, which is the best time of the day to trade. And as we're here on the live stream, historically, the S&P intraday hits its high for the day in the 3rd hour of the day. So that's about between 5 and 6 UK time is the high for the S&P. So if you were going to go short during the day, you need to wait a couple of hours. So there's a whole load of stuff we're going to get in this video, and I think it's really interesting. I'm sure most people won't think it is, but from a statistical trading point of view, there's some real nuggets in there, and one of them is to do with this sell in May and go away that doesn't bear out, but that's the same. Euro sterling. Thoughts on Euro sterling? Euro GBP. I think I was just saying a seller last week, wasn't I? And I think I would stick with that actually now. So the trend for the euro against the pound has been down for a year. So for me, it is a sell up here. So I think the risk is, for me anyway, for a move back to 82 from where we are now. So you can see it's clear, isn't it? These rallies in the euro against the pound, they have not lasted long. I mean, the time to sell was yesterday when it was at 84 and a bit, but I think perhaps we'll see it under a bit of pressure from here. How long would you keep your trades running? Good question. Do you know what? I think I said this before. I was absolutely gobsmacked a couple of months ago to learn that almost, with our clients, almost 50% of trades are closed out within the first hour. Absolutely ludicrous, in my opinion. But, for example, I have got a trade running on the dollar index that I've had running since January of this year. You know, and the market's up, 10% since then. I mean, clearly using leverage, my gains are more than 10%. And I'm happy to stick with it because the thing is still going up. So why would I? So for me, if the market is going in the right direction for me, I'm going to stick with the trades. I think the oldest trade I have running is perhaps platinum, going back to May or June last year. I think it hasn't done much. Last year when markets were really running away, S&P and NASDAQ, I was in trades in there for months. So for me, I think another reason that people lose, they're far too short term. You know, if you're sat there looking at a 1 minute chart of the dollar index, you're just trading the noise. You know, normally the shortest term chart I look at is a daily chart. I do look at hourly charts for shorter term trades on indices, but I don't look at anything shorter term than that. So I'm more than happy to run trades, particularly when they start moving into profit, for as long as they remain profitable. So yeah, for me, I'm quite happy to run it. Myself and the rest of YouTube seems to have bought Palantir over the last year. What are your thoughts? Let's have a look. Palantir. It's Palantir Technologies, isn't it? This is a popular one. Big data and analytics. Well, I think it doesn't look good, does it? I think that I know this was a popular one last year, but I mean another great argument. Have stop losses in place. You know, Palantir in Jan last year was at $44, and here we are at 10. I think it's interesting now, though. I think actually you could argue the trend in Palantir had been down. Are we seeing a reversal? So I think for this little corner of YouTube, it is an interesting one to be a buyer now around 11. The absolute closest I would want my stop, the other side of the March low at 10 or so, and probably the other side of the Feb low down at 9. If it breaks below 9, I think the trap door is going to open again. But it is an interesting one. But I think another great example, don't follow trading tips off YouTube, whoever it is, I think. But it's interesting to see, can it build a base and get a move on from down here? Let's see. Let's see what happens. Where can we check how the trades of the stream account are doing? You can't. They're all in here. So it's my account and they're all in there. So, and I must admit, I put a trade on and normally forget about it. And what's doing well at the moment? Amazon. We must have done a video. I don't even remember doing this trade, but we must have done a video on Amazon on this in February of this year. Let me have a quick look, because I think that is the most profitable trade at the moment. When was the trade? The 7th of Feb. Did we do a video on Amazon on the 7th of February? Yes. Has Amazon jumped too much? Was a video from the 7th of February. So I went short on the 7th of Feb, which would have been here. Oh, actually, it was a good trade in the end. So it moved into profit, then it moved against me, and again, did they make their first loss for a while, didn't they? Was it last night's results for Amazon? So short Amazon. The problem is I always just forget about these trades, so I'll move the stop. I should probably move the stop now. So sold it at 31.50. The market's 2.5. So let's move it to, no, I didn't take profit. Let's move it to 2,800. But I forget about them. So I would never follow any trades off anybody off YouTube, and don't follow any of these open positions because I have a tendency to forget what's going on with them. Right. Do you ever watch trading volume? Good question. No, I never ever look at volume personally. The traditional way of using volume is to try and confirm a trend. So if, let's say you had a downtrend and the market rallied, but it rallied on low volume, people would see that as a negative. I don't think I've ever looked at volume in my life personally, but there are a million different ways to trade, obviously, and for me, it's never been a thing. Can we talk about cocoa? Yes. I mean, cocoa I think has gone a little bit boring, but the trend is up. I remember looking at this. We looked at this on numerous occasions in recent months. The trend is definitely up in cocoa. So I'd still be a buyer on dips. There's the trend line going back to May 2017. So we're 5 years into that trend and it's still up. It doesn't have that major swings, but I'd still be a buyer of dips in cocoa. Even with the US dollar appreciating so much, even though we're at the outset of a recession, we don't know that. We've had 1 quarter of negative thingy-jiggy. The US considering the price of crude oil and other negative factors due to Ukraine, will it help tame inflation? Well, I think if we did see, a big sell-off in crude oil and all these other commodities we looked at today, clearly that is going to help in inflation. But, I can't see it yet. I think, clearly if consumers stop spending, and we saw that drop in UK retail sales, if consumers really stop spending because everything's so expensive, that is going to affect demand for commodities. But I think we need to wait and see. Silver looks horrible. Amazon, first loss since 2015. Yeah, that was it, wasn't it? Twitter goes up. We did the video on Twitter this week, and I did a trade. I went short Twitter this week, and it got closed out yesterday because I did actually rack the stop down. It ended up being not a bad trade in the end. So I closed it today actually for 190 quid profit, because I thought it was strange that the deal had been agreed in principle, hadn't it, for Elon Musk to buy Twitter at $54.20. And I did the video on Monday. And Twitter was still trading well below that agreed price. So I went short on Monday and it did okay. I would still be inclined to go short because I think there's still going to be a few months till the deal gets agreed. So I think if it's, if the deal's going to go ahead at $54.20, so why is Twitter trading below $50? Because I would suggest the market is still not sure this is actually going to happen. So for me, I'm tempted to be a seller of Twitter. If it blips back up to 52, again, Twitter. So it's an interesting one, isn't it? I think the whole Twitter Elon Musk thing. So we are going to have to wrap things up there because I've already overrun. So apologies if I missed your question. I did try and do as many as I could today. Like I say, loads of news next week. Just a quick reminder. Factory gate inflation Monday, Aussie interest rate Tuesday, European retail sales Wednesday, the big one, Wednesday evening my time, interest rates from the US. Thursday, UK interest rates, and then Friday, non-farm payrolls. Loads of stuff next week. So to find out more, go to Capital.com. Any questions, drop me an email, david.jones@capital.com, @JonesTheMarcus on Twitter, jonesthemarcus.com to find out more about me and my trading approach. And if you haven't subscribed to us, just make sure you have subscribed to our YouTube channel and Twitter and Facebook. So we'll wrap things up there. If you're in a part of the world that has a long weekend, have a good long weekend. Enjoy having Monday off. Loads going on next week. And we'll be back on next Friday to do the live stream then. So thanks for coming along and good luck with your trading.